Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. Now, how can Florida still have population growth, luxury, sales booming, and long-term demand, yet also be labeled the riskiest housing market in America for future price declines? Well, today we're going to break down how Attom, that's ATTOM, holder of some of the largest databases of housing information and data, how they came to this conclusion, and why certain markets are considered risky versus safe. And one major thing, I think these reports are often missing. All right. Now, this is not a prediction of Florida real estate. It's not a prediction that anything good or bad happens to Florida real estate or any of the other states or counties on what we're about to talk about. But it is a risk analysis based on current stress signals. That's the best way I can describe this data that Attom came out with. What they looked at was affordability relative to incomes. They looked at seriously underwater mortgages, and they looked at foreclosure rates, and they looked at local unemployment. Now, all of this is local data. That's key. They're measuring financial pressure in local housing markets. Do you have a job? Are you underwater on your mortgage? Can you afford what you have as far as this house is concerned relative to your income? So we are not taking into account desirability. Is there any migration to this location? Long-term demographic demand, future economic development. All right, so that's an important distinction here. So note, what is Attom actually looking at? And why did Florida rank so risky, as they labeled it? In fact, the riskiest housing market out there right now. Well, they found that 12 of the 50 highest risk counties in the U.S. were in Florida. They found that Charlotte County and Punta Gorda County ranked as the riskiest in the nation. Those are two on the west coast of Florida. Now, what happened in Florida? Well, we know prices ran really far, really fast post-COVID. A lot of markets doubled almost overnight, overshot affordability for sure. A lot of speculative buying, a lot of migration, a lot of investor buying, second home demand. Now, keep in mind that when inventory in Florida, rose substantially in recent years, it took a lot out of the wind of the sales of that market, right? New construction came into Florida at a very rapid rate because demand was so high. So, of course, builders are going to come in, right? Now, Florida was a heavy investor area too, right? A lot of investors speculated and came in. And in recent years, they slowed down, obviously. So there was some volatility there in the last several years that I think in Florida is pretty obvious. Now, my question is this. Is Attom analyzing future demand? Or is it just focused on the current local stress? Because they're two different things, and I think you can't take that out of the equation if you're going to really try to figure this out, okay? Because markets, they can be risky short-term, but we don't know where the long-term trajectory is because Florida still has population migration, retiree demand, plenty of international demand, tax advantages, no state income tax, and now even talks of slowly ridding the property taxes. That is on the table. In fact, there's a vote in November coming up on whether or not They're going to increase the amount of the homestead exemption that someone can have on their personal property, which therefore means they would pay less in property taxes. Now, there's business migration, weather, lifestyle appeal. None of that's changing, last I checked. So the question is there a permanent structural problem going on, or is this just a cyclical affordability correction after a massive run-up? I think it's the latter. All right. Now, California was also flagged, but for different reasons than Florida. It's a pretty interesting contrast, but California also topped their affordability stress rankings. Some counties in California require 88% of your local annual wages just for housing expenses. Can you imagine 88% of your paycheck just going to housing? Yeah. Well, Kings County, New York was over 100%. I don't even know how they figured that out, but they did. Basically, you can't afford your house or anything else. So what's California's problem? Well, it's serious affordability stress, right? So now, it's important context here because I think when they say underwater mortgages, people get a little on edge. You hear the word foreclosures, you get a little on edge. But look, 3.2% of homes were underwater, or let's call it even seriously underwater, in the United States, right? Nationally, 3.2%. That's a small number. And that's nowhere near what we saw in 2008. So this is not a reflection on what may come or what housing crash may happen here, just because we hear those terms. Foreclosures, active foreclosures nationally, 1 out of every 1,211 homes is an active foreclosure situation. I mean, it's that low. So don't look at this headline and think, oh no, systemic housing collapse. Okay, that's not at all what we're talking about here. All right, so what about the safest markets? All right, well, Adam ranked Chittenden County, Vermont as the safest market in the entire United States. Other safe counties were Rutherford County, Tennessee, Arlington County, Virginia, Tippecanoe County, Indiana, and Cumberland County, Maine. Now, Adam specifically says these weren't necessarily the most affordable markets. They managed to point that out. But what made them consider them safer was just this: low unemployment, low foreclosure rates, and low underwater mortgage exposure. So, in other words, the risk profile was low. There's no chance of anything bad happening as long as people are working and are not in any sort of foreclosure issues or have a mortgage that's exposed underwater. All right, so, housing stability often comes more from just stable employment and homeowner equity. There is more to it, but this is good and, it's key insight. But I still think the report undervalues future migration trends because demand can solve a lot of these so-called risky markets if rates ease, if inventory stabilizes, right? And migration continues, and some of these risky markets are going to stabilize quickly. And especially if they're in a desirable long-term migration location like Florida or California. All right, so keep in mind that I think the real question isn't whether certain markets are risky today. The real question is whether today's weakness that are considered, as Adam put it, risky markets is temporary, or whether long-term demand eventually overwhelms any risk that's out there. And that's where understanding migration, trends, demographics, and future demand becomes just as important as understanding today's affordability metrics. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at The Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content, and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it.